A major shift is unfolding in real-world asset tokenization, one that bypasses traditional finance gatekeepers while drawing record institutional participation. The Ondo protocol has surged to $3.778 billion in total value locked, a milestone not just for scale, but for the hidden architecture powering it. Most investors see only one piece of the puzzle. The real story lies in how three distinct financial products are converging under one ecosystem, each targeting a different tier of the financial system. That structure is what's accelerating adoption at an unprecedented pace. Ondo Global Markets, the most visible arm of the Ondo protocol, has crossed $1 billion in TVL in under 8 months, faster than any other tokenized equity platform in history. It offers non-U.S. investors direct on-chain access to U.S. stocks and ETFs like Tesla, Apple, and the QQQ. With entry points as low as $100 and 24/7 trading, it eliminates brokerage accounts and T+1 settlement delays. Over 260 tokenized securities are now available, and cumulative trading volume has hit $18 billion across Ethereum, Solana, and BNB chain. The platform holds over 70% of the global market share in tokenized stocks, proving demand for frictionless equity access. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The second product, USDY stablecoin, operates in the yield layer of DeFi. Unlike passive stablecoins such as USDC or USDT, USDY is a yield-bearing token backed by short-term U.S. Treasuries, delivering approximately 3.5% APY with daily compounding. No lockup is required, and the value accrues directly into the token. With TVL between $2.15 billion and $2.7 billion, USDY is one of the largest contributors to the $12.88 billion tokenized U.S. Treasury market. Its cross-chain transferability and DeFi composability make it a functional upgrade to legacy stablecoins, especially in a rising rate environment. The third product, OUSG Treasury token, targets institutional infrastructure. Designed for accredited and qualified purchasers, OUSG is a tokenized short-term U.S. Treasury fund with 24/7 minting and redemption. In May 2026, it played a pivotal role in a cross-border treasury pilot with JPMorgan, Ripple, and Mastercard. A redemption settled in under 5 seconds, faster than any traditional banking rail. BlackRock's BUIDL fund participated as a core partner, signaling deep institutional alignment. This wasn't just a test, it was a live demonstration of how blockchain can streamline global capital flows. The Ondo protocol now spans retail access, yield infrastructure, and institutional settlement, each layer reinforcing the others. Over 165 ecosystem partners, including Franklin Templeton, MetaMask, Brokerage, and XRPL, are now integrated. The launch of Ondo Chain, a purpose-built Layer 1 blockchain for real-world asset infrastructure, further consolidates this stack. This isn't a fragmented suite of products, it's a full-stack architecture for institutional DeFi. The real breakthrough isn't just growth, it's integration. While most protocols specialize in one niche, the Ondo combines tokenized equities, yield-bearing stablecoins, and institutional-grade settlement into a single framework. That convergence creates network effects. Yield seekers flow into USDY, which funds back tokenized treasuries, which in turn support collateral for equity exposure on Ondo Global Markets. It's a self-reinforcing cycle. Still, the rapid rise raises questions. The majority of USDY's TVL comes with minimal retail attention, suggesting institutional quiet accumulation. And while the JPMorgan blockchain pilot proves technical viability, widespread adoption depends on regulatory clarity. The Ondo operates across jurisdictions, but how regulators classify these tokens, especially as yield-bearing instruments, remains unresolved. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The involvement of Franklin Templeton and BlackRock signals confidence, but not immunity from future scrutiny. The next signal to watch is regulatory positioning. Will U.S. authorities treat USDY and OUSG as securities, money market funds, or something new? The answer will determine whether this infrastructure scales globally or faces jurisdictional fragmentation. For now, the momentum is undeniable. The ONDO has redefined what's possible in real-world asset tokenization, not by chasing hype, but by building a multi-layered system where retail, institutional, and technical demand converge. The $3.778 billion TVL isn't just a number. It's evidence of a structural shift already in motion.